Good evening, all. Ira Epstein, and I am running a bit late tonight. Can't help it. It's going to get worse for me. My wife's birthday, her retirement party. There's so much going on this week that I'm dizzy from it all. But to make a long story very short, it is Wednesday. I'm getting so dizzy from this. August 6, 2025. All right, my friends. Let's go to the news of the day, then we'll cover the markets. Weekly jobless claims coming out in the morning. Second quarter non-farm payroll data. That's going to be important. That's at 7:30. We're going to see Atlanta Fed President Bostic going to deliver remarks tomorrow. President Trump, well, today he invited Tim Cook back into the White House. And remember, he was the persona non grata. Where did he disappear? Because they weren't doing what the president wanted. So to get back in, he tells the president, we're going to invest another $100 billion within 4 years, bringing our total up from $500 billion to $600 billion in America to build facilities, to hire people, to do more research, development, AI, all those things. And instantly there's a press conference this afternoon, and the president during it welcomes all this, telling you how good this is. And then he announces that there's going to be a 100% tariff coming on chips and semiconductors imported into the U.S. from companies that are not building a factory to manufacture chips and semis in the U.S. If they're doing that, they don't have to be making them yet. If they're doing it, if the plans are there, they'll define what that is, then there's no tariff. So he's continuing with his game plan. It's a taco trade. You know, Trump always chickens out. You can't possibly, you need some of these chips. There's no comparison that you can go from. It's like the NVIDIA. You know, how do you find some of these chips? So there's a certain element to that in the market. Also, we were told by Special Envoy Witkoff that President Putin would like to meet with President Trump. And obviously this is happening because by Friday or so, the U.S. is supposed to put more sanctions on Russia. And of course, who's feeling the pressure of this right off the bat is Brazil, which they caught the wrath of the president with another 25% tariff on the 25% already. But that one will kick in 3 weeks instead of tomorrow, where most of these tariffs kick in. So it gives time to make a deal and then remove that, because if you can make a deal with Putin, why would you put over time any real tariffs on people that Russian oil is being sold to? At the same time, it makes no sense. Why? The biggest buyer is China. Do I see us saying, hey, we're going to tariff you 25%, 100 because you're buying Russian oil? There's an element here of showmanship, negotiation, pressure, and that's what a lot of this is. It's hard to read. If you think you're great at it, you got them figured out, but most people don't, and that becomes the difficult part of everything. Now, today in the market, we had pretty much a mixed bag. You had a good move other than in the Russell and the RSP. So as you look at the weighted index, didn't do that well, but when you look at the typical S&P, the Dow, and the NASDAQ, they had gains for the day. The FANG stocks, XLC, they were doing fine. Bonds and notes gave up a little bit. Now, there's another move happening. The Treasury Department apparently is getting ready to front load a lot of debt. In other words, instead of doing 10-year notes, 5-year, they're moving tomorrow on a monster amount of money all for a week. And it makes sense if they're right, and if Scott Bessent's plan is that the Fed is going to lower rates, interest rates are going to fall. Why tie your money up higher when as it's falling, you can keep rolling shorter term money? The danger is some event happens out there that doesn't cause that to happen, and it goes up, and he says, well, that just be part of the game. We pay a little bit more, but it's not dramatic. But the savings could be dramatic if the rates fall. That is the bet that I see him making. Uranium back up near the 41.5, 42 mark. That's a good move in the market. Starbucks down one more time. AMC still falling. This is the summer. I look for problems in that to go even worse from a fundamental point of view, not a chart point of view. NVIDIA, in looking at this, market gain. And in the aftermarket, it's over 180 because when the president made that statement, who's the winner? NVIDIA builds things here in America, so they get the winning of that. Look at this gain in Netflix tonight, $30. So is the market underpriced? Yes, I think it is. For the market. You know, Disney had a great day in the sense that they're making all kinds of moves to wrap up wrestling, football, all kinds of things into their package. And I have a feeling they're trying to get away from cable TV, and you're going to be able to buy some of this direct and play it in smart TVs. They're getting pretty smart with this. Amazon came alive today and back up another $8. So we're getting this typical big jumps, big hits to the downside, back and forth in the market. Toast today, look at how much it gaps sharply lower. And this market, if you go and look at it, it often gets 5% moves. The earnings per share came in at only 13 cents, way short of the 22 the market was looking for, but they added a tremendous amount of subscribers. So if you're adding subscribers, there's a cost to that at the beginning, but then once these people are in, you own them because people don't like to jump from system to system. So I look at this as actually good news longer term, but I figured going into earnings could be always dangerous from new highs. This is a new high in the market. It's still up, 25% or so for the year, so it's up rather sharply. I might even be low in that number. You can see the higher high, lower low. Look where the market stopped, right at the Bollinger Band. Fascinating to me. When we look at moving averages and all, there's another level down here it could have gone to. And slow stochastics, when you lost them, that caused the break. And it all happened ahead of time. So I don't think you're going to deny that the market had the embedded reading right through here. Market's up there. You lose the reading. I'm looking for that 18-day average. It all happened at one time, and kaboom, back down again. So no surprise. You lost the momentum, and that told you to be careful on the kickback. Netflix, if you can lose the bearish momentum, which it's right on the door of doing it, 1975, price and the 18-day average could easily make a run at each other. Now that average is going to fall a little bit tomorrow. It's moving about $4 a day, so look for it probably closer to the 193, 194 zone. Dash. This is something we're going to start adding onto the charts for the day that we do them. Dash beat on the bottom and the top line. The earnings came in better. The orders are increasing galore, but that Bollinger Band is stopping the rally, and you're overbought, not yet embedded. We'll see if they can do that. In Google, higher high, lower low, chart is overbought. I'll let somebody else want to play an overbought market. Starbucks, I still will say, has problems galore. I like what Robinhood is doing. It seems to be narrowing in day by day the Bollinger Band. It will break out of this one way or the other shortly. I'm still thinking upside, more upside in this market. In Tesla, look at how we came back to the 18-day average. Now the market's got to see if it can do anything. You have the trend down, you squeaked out a higher bias, and you've corrected an oversold condition. Overall, you're caught in that sideways action. So I'm looking for choppiness. After the first hit 2 days ago in Joby, coming back down, and momentum's turning down. Do not be surprised because you lost the bullish embedded reading for price and the 18-day average to make a run at each other over the next few days. In XLF, the financial sector, you come down in momentum and flattening out. You got a higher high, lower low. I don't see anything that's there of interest. In the industrials, if you can get over now 150, 160 and close over the 18-day average, whatever it is tomorrow, you can actually get thrown back to the upside in this market. And if you do that, maybe you can come out of the sideways action to the upside. We'll see. I think a lot of people tomorrow are going to look at the jobless numbers and how that auction goes for this big number that the Treasury Department wants to sell. On energy, I still remain in the market that is pushing to the downside here, and that's, of course, for the refineries, the pipelines, and so on. In GLD, GLD's drifting, but the gold miners went bananas to the upside. Same happened in the silver miners. Yet the products themselves aren't going anywhere right now. Even copper miners came back to the 18-day average. So this big break has ended. The question is it the beginning of something or just That was it for a little bit. I will not be surprised for churning in the month of August. August is notoriously not the best month of trading. You have the embedded reading in BND, so any breaks in the market until that red line closes under 79, I think the trade's going to buy it. Now, the dollar. I've decided I'm going to do the dollar report. Why not get an update on where we were and where we're at right now? For the moment, until you take out the highs of yesterday, this market's back into the bear camp. It's got to stay under the 18-day average, and if it does, maybe you can get to the lower Bollinger Band. And you flip-flopped on the FXE, and you don't want to get underneath Tuesday's low to see if you can get up in a further rally right here. That's what I'm seeing, and obviously a lot of trade affair, but not a lot of trend affair, in my opinion, going on. I'm Ira Epstein. Hope you look at the other videos. Remember, you can get our free offerings. You'll see the icons on the top here. I'll catch up with you in the other videos or first thing in the morning. You have a great evening.